welcome back to my channel. Today I want to speak to you, or I want to share with you something very important, something simple but yet very powerful, and that is high probability supply and demand zones. So I've been trading supply and demand zones, and this that I want to share with you is something that I've experimented on, and it's very powerful. So high probability supply and demand zones. Now there are conditions to finding these high probability supply and demand zones, and these are the four conditions or things or factors that have to be met for you to identify a high probability supply or demand zone. And the first part is or the first condition is that first liquidity must be taken out in whatever trend that the market is in, whether it's in a downtrend or a rising trend or an uptrend. First, liquidity must be taken. Then secondly, there must be a strong price movement in market direction that will eventually break a certain structure. Yes, and in doing so, price will create an order block, and also it will create an imbalance gap that the market will need or will have to fill. Yes, and also liquidity must be created in the process. Now, after telling you all that, I can show you a simple illustration. And this is an example in a bullish market. Yeah, it's an example in a bullish market, that assuming that the market is making a series of higher highs and higher lows. Yeah, like so. So what do I mean by that the market must take out liquidity? You'll find that most of the time the market will come and break a certain structure, like this, and resume its original move or its original trend. So like most of the time, most people would expect that the market will maybe, as it's pulling back, it will maybe retrace only to a certain point here. But you'll find that sometimes the market will do a pullback that will break a certain structure or take out liquidity. This is what I refer or mean when I say that the market will take out liquidity. It will take out this liquidity, and it will strongly make a push. Like in a bullish market, price will make a strong bullish move to the upside that will eventually break this structure. Yeah, a structure like this, and after that it will leave an imbalance over here and a very clear order block around this place. So after that, the market will attempt to create liquidity. Yeah, it will attempt to create liquidity. And in doing so, it will also break another structure. It will also break another structure. Let me just mark it there for you so that it may be clear for you to see. So the market will attempt to break a structure like so. I can label that break of structure. Yes, the market will attempt to break a structure like that. Then after reaching a certain point, the market will now retrace back to fill this imbalance gap, and upon tapping the order block zone, you'll find that the market will push back up. Yeah, so this area, this is what I consider as a high probability. For this case now, this would be a demand zone, high probability demand zone. And the same applies for a bearish market. The same applies for a bearish market. So in a bearish market, you get something like this. In a bearish market, you'll get something like this. Like, say the market is making a series of lower highs and lower lows, then you'll find that the market will at some point take out this point and like get to an area like this, then make a very strong push to the downside, a very strong push to the downside that will break this structure right here. Yeah, then after that the market will make a first move of which I normally consider as a fake or a trap move, not a fake but a trap move, in an attempt to create liquidity, and it will leave an imbalance right over here and an order block over there. So it will create a trap move right there, and it will break again a structure like so. And then upon the market, okay, so after that you'll find things like this. So let's just try to make these points. Like, there is a break of structure right here, there's a break of structure right there. Let's label that as a not a break of structure, but a liquidity that has been taken out, like so. So after that, then you'll find there is an order block right here, an order block right there. We can label that order block. We can label that zone as an order block zone. Then you'll find then again that the market has created liquidity right there. Yeah, has created liquidity, liquidity right there, like so. Let's label that liquidity that must be taken out. And sometimes it might not be exactly like this. The market might try and do something like this. Yes, do something like that. Yeah, create a double top, what most people call a double top or a triple top. Then after that, again, you'll find that there is an imbalance. There is an imbalance right here. You'll find that there is an imbalance right there. Let's label that. All right, yeah, okay. You'll find that there is an imbalance right there. So this is what I call now. This is what now I call an high probability demand. I mean supply zone now. For market, most of the time is expected to do something like this. It will come to this point, tap that point, and resume its original price movement. So this is what I call a high probability supply zone. You can backtest this. You can try and trade this on your demo account. You'll find that it works most of the time. Yes, there will be trades that you'll lose, but let's say a high percentage of them you'll be winning them. So let's go to the chart now. Let's try and dissect, or not dissect, but let's try and analyze like this pair now, Euro GBP. This is what is currently happening on Euro GBP. So you can clearly see that the market is on a bullish trend, like so. Let's delete this. Let me delete these. We are done with them. We no longer need these, so that we can have a clear working space right there, like so. All right, so this market is clearly on a bullish trend, and you can see right around this point market did retrace, and it took out all this liquidity that was over here. all this liquidity was taken out. All this liquidity was taken out by this movement right here. Was taken out by this movement right here. Yeah, it was taken out by this movement right here. And so we can label this area. We can label this point as our liquidity that was taken out. So after that, the market made a push to the upside. Now, this is not that much of a strong push, but I will show you another example where the market was really aggressive and it really made that strong push that I was considering. But even this is still okay. So the market really, now the market really broke the structure. Broke the structure. You can label that as a break the structure. And as it was moving up to break that structure, you can see that it was creating liquidity as it was moving out. It was moving up. You can really, sometimes you can mark this area as your whatever, as your trap move. As your trap move for you see sometimes, or other smart money traders will tell you that this is a break of structure. So when price gets to a point like this, you expect it to like move to the upside, but most of the time it doesn't work because there is no liquidity that was taken out of here. I mean, there was no liquidity that was taken out, and as you know, liquidity is what drives the market. So once you understand such things, you won't be taking such trades, for you know exactly what the market makers are trying to do. So you'll be avoiding some of these traps. You'll be seeing these traps and you'll be avoiding them. Yeah. So like that. But still, there are these places, like all these would be considered as liquidity. All these must be taken out for me to be really comfortable with this trade. For me to be really comfortable with this trade, all these must be taken out. All these must be taken out. All these must be taken out for me to be like really, really comfortable with this trade. Wait, bottom. Okay. So all that must be taken out for me to be really comfortable. Now, after that, you have to like try and see if there is any imbalance. Now, on the 4 hours, you can see that we don't see any imbalance as every gap has been filled. So we can maybe go to a lower time frame and see what's happening on a lower time frame. Again, on a 2-hour time frame, there's no imbalance. So maybe I can go lower to the 1 hour. On the 1 hour, there is this minor imbalance right over here. There is this minor imbalance right over here. Let me show you the imbalance. This small gap, there is an imbalance right there. So I will mark this order block, which is the last candle before the push to the upside, like so. Like so. So I'll be expecting that when the market gets to this point, let me just show you. Let me just move to the 2 hours so that we can have a clear view. So I will be expecting that the market, once the market gets to this point, I will be expecting that the market to push further upside to the upside. But again, like for this setup, I'm really not comfortable with this, with how price moved right here. Yes, this can definitely work, can definitely be a good setup, but let me just show you what I mean by when the price makes that strong push that you really need to see and be confident that the market is, a demand zone is actually or a supply zone is actually high probability. So this still could be a very high probability, but let me show you this. I mean, this zone could be a high probability zone, but let me show you the kind of zone I'll be comfortable trading. So let's move to another pair. Let's see GBP CHF. Let me see, that is, let me move to the 4 hour. To the 4 hour, do we have a high probability? Maybe not that. Let me see. Let me look at another pair. All right, here's one. So this is a very nice one. Let me just clear so that I may show you. I may show you exactly what I mean. Let me just clear all this. I had analyzed these pairs before I recorded this video. That's why you're seeing that they have already been analyzed, but let me just show you what I mean. Okay, now for GBP AUD, you can see that the market was on a downtrend. Yes, it was creating. So there are 2 points where market took our liquidity, but we only consider the latest point where price took our liquidity. So in this case, we are this place, this point, and this point. Let me just mark it for you so that you can see. So we had that point, and then sorry, let me just do that again. Let me just do this again. All right, so the market was making a series of lower highs and lower lows. Then the market went and took out this point. So this would have been a high probability demand zone for us. But then it went, okay, so it went and made a lower low, a lower high over here, a lower low. Then it took out this point. Yeah, took out that liquidity and pushed down aggressively. So let me just mark that clearly so that you can clearly see. All right, so the market did something like that. It is on a downtrend, creating lower lows and lower highs. It took out this point, then pushed down further and created a lower high and a lower low. Then it came and took out this point. Then after that, it made a very aggressive move to the downside. So let me just show you. Let me just mark so that you can clearly see what I mean. All right, so we have that point. We have this point right here. Let's just mark it as an area where liquidity was taken out, and we have this area over here. We have this area over here. We have that area over there, like so. But then we are only going to consider this because it is our latest point where price took our liquidity. So this would be our, we would consider this a lot more than we would consider this point. So after this after this price was taken out over here, this liquidity was taken out over there, you can see that price made a very aggressive push, a very strong push to the downside. And you can see that these are 3 powerful healthy candles on the 4 hours, which indicates maybe it was a news event or something. So price really made this a strong aggressive push, meaning that over here we had a lot of sell orders that were pressed around these places, around this place. This is indicates really what we call those aggressive institutional moves. So we can again, we can mark this area as our break of structure. We can mark this area as our break of structure, like so. It's our break of structure. Let's do that. Our break of structure. After breaking structure, now you can see that Now, before that, you can see that our price created an order block over here, and also a lot of these imbalances, gaps that the market needs to fill. And in doing so, you can see that there is liquidity that was created over here. These are people's stop losses that needs to be cleared and be taken out. And as I always say, that liquidity is what drives the market. Like, the market makers don't care about anything else other than liquidity. It's what drives the market. The moment we don't have liquidity in the market, that's when the market will stop doing what it's doing. We won't have the forex market anymore, or any other market. You really need liquidity. So that's our area of interest, or our high probability zone, because we had price was taken out over here, liquidity was taken out. We have a very aggressive move, and we also broke structure, and we have liquidity. So if I was to trade this, I would wait for price to come back to this area, maybe do something like that, and come back here. Okay, let me just make it much more cleaner. It's Sunday, by the way. Once the market opens, maybe we might see price doing something like this. Yeah, something like this, like so, and maybe tap this area. Once we tap this area, I am expecting that price will push down to resume its trend. Price will push down to resume its trend. Now, this is what I call a high probability supply zone, and the same would also apply on a bullish market, as we saw in the illustration. So this is what I wanted to cover in this video. I hope you find this helpful. Let me know what you think in the comments, and please, if you're new, please subscribe to my channel. I really need support. I really need your support. And as you know, this is a new channel, so I really need your support. I really need you to subscribe. I really need you to comment in the video. In the comments. I really need you to push and share this video with your friends, someone you think that might find this information helpful. So really, that's it. That's all I wanted to cover in this video, and I hope to see you again in my next video.